Business, trade, cycle. Almost all economics of the world have suffered from economic fluctuation and different stages of their economic growth. The business cycle is associated with fluctuation in macroeconomic activity. Business cycle is characterized by recurring phases of contraction and expansion in economic activity in terms of employment, output and income. The period of high income, output and employment has been called the period of expansion, upswing or prosperity. And the period of low income, output and employment has been called the period of contraction, recession, downswing or depression. These alternating periods of expansion and contraction in economic activity have been called business cycle. They are also known as trade cycle. Trade cycle has been defined by different economists in different ways. According to Haberler, a business cycle is an alternation period of prosperity and depression of good and bad trade. Phases of business of cycle. Generally, a business cycle has 4 phases. 1. Prosperity. 2. Recession. 3. Depression. 4. Recovery. 1. Prosperity. Prosperity is a phase of high income, money consumption and production level is high or rising. And there are no ideal resources or unemployment, for example high profit, full employment, income, high standard of living, etc. The prosperity comes to an end when forces become weak due to inflation and more investment. This causes shortage of raw material and factor of production and services. As a result, there is fall in demand and profit. Thus prosperity ends and the next phase of recession starts. 2. Recession. When prosperity phase ends, recession starts. It's an upper turning point. This is a phase of slowing down of economic activity. Recession is normally of short duration. There is fall in profit margin, rate of employment, income, etc. If recession continues for a long time, then it turns into depression. 3. Depression. Depression is a period in which business or economic activity is far below normal level. This is a phase where there is sharp reduction in income, consumption, production and unemployment increases. Depression may be of short duration or may continue for a long period of time. After a period of time, there is moderate increase in demand for goods and services, which helps to increase profit, income and employment. Finally, it leads to recovery. 4. Recovery. Recovery is a phase which is called as lower turning point. It is a period in which there is moderate improvement in demand for goods and services, which help to increase profit and income. Once the recovery phase starts, it takes the economy on the path of prosperity. With this, the cycle of business repeats itself.